What's up, guys? Good morning. Welcome in. Hope you guys are doing good. Let me know in the chat if you guys can hear me and see me. Hope you guys are having a good week. Sweet. Thank you, thank you. Let me restart my chat. That's not working for some reason. 1 second, guys. There we go. There we go. My chat wasn't working. Now it's working. I had to restart it. Sweet. How's everybody's week going? It's been relatively sideways for a lot of this week. And then we've had some substantial imbalance moves, but it's been a little tough to catch. I've been pretty inactive this week. A few trades here and there. Welcome in, S&B Financial. Welcome in, Brandon Forex. Good morning. Kush from Nepal. Good morning. It's definitely been a week of tape bombs for sure. A lot of fear in the market, uncertainty around different AI disruptions. So we'll get into the analysis for the day. If you guys missed it, in the Chart Fanatics Discord, which is a great free resource, by the way, if you're not already in there, I recommend checking it out. But in the Chart Fanatics Discord, I have a channel under Matt Owen. I've already shared my game plan and screenshots of my charts and analysis, stuff that I'm watching out for here this morning. So go and check that out. Big announcements dropped in there as well this week, if you guys missed it. Yep, so game plan's already in there. I will touch on it here as we go through analysis here this morning. Good morning, Blair. Welcome in from New Zealand. Zoom out my charts here to kind of talk through some higher time frames, what I'm watching out for. We had CPI data this morning, and we're going into a holiday weekend. So very important to stay patient. Anytime we're going into a holiday weekend, sometimes volume can tend to dwindle out, and it can turn relatively choppy the later it gets going into a holiday weekend. However, we've had a lot of volatility, especially since yesterday's sell-off on the indices. So that could certainly spark, and with CPI data coming out this morning, it could certainly spark continuation of the volatility. What are you looking for confirmations in a trade? That's a loaded question. There's a lot we could get into there. So it just depends on the type of setup, depends on a lot of things. I would say check out the intro to Orderflow trading video that I shared, and I've done one here on Chart Fanatics before on YouTube. Liquidity versus order flow, which wins? I don't understand the question. Liquidity, is liquidity a strategy? Both of them are just things in the market. Short setup today. Yeah, I'll go and get into the setups. First, before we get into it, a quick shout out to our sponsors that make this channel possible for you guys. Let me fix my camera here. So Apex Trader Funding, they got some good discounts going on. If you use the Chart Fanatics discount codes, Funded Next as well. Let me see. We do have some giveaways as well. Let me just verify that. Yeah, we've got Apex accounts, Alpha Capital accounts, and TradeZella 12-month account. So we got some giveaways coming up later in the stream today. Make sure you stay tuned in for that. But yeah, without further ado, let's get into it and go through some analysis to start the day. I primarily trade ES and NQ, the S&P 500 and the NASDAQ. This right here is Bookmap. This is my preferred tool for analyzing the order flow in real time, as well as a full depth of market. I do have footprint charts. I do have volume profiles and just regular candle charts up that I look at for analysis as well. But I primarily teach analyzing the order flow from Bookmap because I love the basically live tape reading visualization here. But I'll go through some higher time frame charts and stuff for the analysis of what I'm watching out for today. I already kind of shared that in the Chart Fanatics Discord. Again, you guys can go in there and check that out. But I'll talk through it so we can all be on the same page here as far as what I'm watching out for. There's a lot of broad-based selling in the market now. It was initially kind of software leading the market lower last week, and really year to date it's been hit hard, a lot of the big software names. However, that's kind of spread over to a lot of other things as well. So real or not, the fear of AI disruption has been triggering a lot of downside recently in the market. However, despite that, we're pretty much just still in the same higher time frame range that I've been watching since like October. We've had October of last year. We've had a very sideways market overall. So I'll show you some of the levels that I'm watching. ES has stayed relatively stronger. The S&P has stayed relatively stronger. And that's because it has not been hit as hard. It's not as heavily weighted on the tech and software side. So NASDAQ has been dragged lower because of that. It's got more exposure to that. But let me pull up my charts here. 1 second, guys. I'll answer questions throughout, guys. I do see your questions, but let me go through the analysis here of stuff that I'm watching out for, and then I will get to your questions. The questions are great. I like to make the streams educational and focus on just sharing as much value and helping people throughout. So just looking at purely a daily chart here on the NASDAQ. This is NQ, NASDAQ futures. You can see this area, these prior lows. This has acted as demand area going all the way back to like September, October timeframe. But since then, we've basically been totally sideways in this range. Really very few levels for me in the middle. And then obviously, mark this. Obviously up here at these highs, we've had a lot of resistance near all-time highs. So on a multi-month basis, just looking at the daily time frame here, you can see these lows have continued to be supported and these highs have continued to be resisted. We also have a little bit, we've also been having some support above that here, right? You can see this last major swing low. We dipped under that into there. So I'm watching this area here as well. You can see we're coming to basically the lower range that we've been in for a while now. If we break this, that could be a pretty substantial shift in market structure to the downside that we haven't seen in a while. Look at the S&P, ES futures. So similarly, this is an area up here that's been repeatedly acting as resistance. You can see up here. And on the downside here, most recently, this area has been supported. And over the longer time frame, this was a key pivotal area for me based on order flow, based on some other stuff. I've talked about that in the past streams. You can see how we wicked under there, briefly recaptured back above it. So above this, you know, we're coming into this kind of higher time frame area that's been supported multiple times. And every time we've tested that, we've bounced back up into the highs. Again, every time we've tested these highs, we may have peaked above it a couple times, but every single time so far for the last couple months, we've rejected back down to the lows. So we've just been pretty much ping-ponging in this range. The biggest thing that I don't like to do in these conditions is just get very involved in the middle. It's just very, very wicky and not, great trading conditions, at least for me personally. This is ES, this is the S&P 500 futures on a daily chart. So you can go through a lot more time frames, but it's really just noise. We're pretty much coming into the lows of that area, and I'll show you guys just the volume profiles that I'm watching here. All right, so you can see yesterday we had a pretty large sell-off, and then we pretty much consolidated all afternoon in this range, broke down a little bit further, and then consolidated again. Look at where all this volume is built over the last couple days. So this is an important area to watch here between like 68.90 and these lows here around 68.30s. If somehow buyers are able to recapture above this and hold pullbacks above this, I don't really see much from stopping us to go back to the top of this higher time frame range. Again, that is this area up here, similar to what I showed you on the daily time frame up there around 7,000. That's been key resistance, just under all-time highs there. And if we do continue to break down here, then I don't see much from stopping us from kind of going for these prior lows. Those are kind of the most near-term things that I'm watching. Now, within that, typically, when I see balance ranges form like this, and I'm considering this kind of a balanced area, basically from yesterday afternoon through this morning. If you look at the volume distribution, leave that down there. Clean this up. So just looking at the volume distribution, you can see how we had very little volume there, and we basically built a lot of volume here, and we had very little volume over here before. Right? So we have essentially a large balance range here. It's not super clean balance range, but a lot of volume basically built in this range here. So the other thing that I like to watch out for is failed breaks above and below if we just continue to mean revert. However, the near term sentiment has shifted slightly bearish, right? So if we see fake outs at the highs, that's probably a better setup right now to target those mean reversions back into this range. Or, if we get a good position there and this thing dumps again, like we've seen a couple times recently, then we're kind of already positioned for a larger drop. Yeah, you guys know the Tundra. Matt knows the latte is the perfect pair. Yep, I got the iced latte rocking always. That is the fuel that drives the dreams of champions. Yeah, I use supply and demand. So what I'm going through is kind of based on supply and demand, right? So I would look at this area up here as an area of supply, right? Somebody asked, Matt, do you use supply and demand for your analysis or just entries? So I use candle charts and volume profiles to analyze basically supply and demand, support and resistance, and where volume is built with that, right? Because that's where people are and where people are supporting or resisting price. So this is an area of supply essentially where we consolidated and then broke down from. And then we're kind of possibly gonna see this area form as demand. And if I shift my volume profile over, you can see there's a lot of volume built over here. That kind of turned into demand once we captured above it. There was a lot of volume built over here, right? So this is kind of a near-term area of demand where all that volume was built. We've dropped quickly back down there, and now we're consolidating. Now what happens next? I don't know. We'll see. So I look at those areas, and then I look at the order flow real time to gauge my entries and get my entries. Right. So I use the order flow on Bookmap, on footprint charts, and then I also combine that with analysis on like volume profiles for trade entries. Yeah, I don't really think there's any strategy that couldn't benefit from understanding reading the order flow and reading the real-time like market auction, because at the end of the day, that is the driving force behind the market movements. So regardless of what strategy you trade, at the end of the day, people have to place orders, and so combining an understanding of that, in my opinion, is a huge benefit to any trading strategy. So we had a nice pop off of the CPI data this morning, but nothing that's really changed anything with structure or overall. We kind of popped into the highs of the consolidation range up here. Do a little, see all that aggressive buying into the highs of this consolidation range. Did not get acceptance above, and now we're kind of pulling back inside the middle of this high volume range. Excuse me, guys. Inside the middle of this high volume range, there's not much that I personally am interested in touching. And looking over here at ES, you can see again similar. We had all this aggressive buying up here into the highs off CPI. Didn't shift structure in any meaningful way, just kind of took out the highs and is pulling back a bit. So we're seeing a little bit of strength off the CPI news, but nothing that's shifted structure in any meaningful way. So continuing to just stay patient and watch what develops here. Yeah, this tool is called Bookmap. So we got about 12 minutes till the market opens at 9:30. I don't really trade the pre-market unless something just super clean and key develops. I just go through my analysis and just kind of wait, especially after data's come out like this. You know, if you catch something in the volatility after news, great. But after it kind of settles down, I don't really see much reason to get in the trade, especially in the middle of the range, until after the regular trading hours open after 9:30. Matt, would love for you to do a video on how to trade order flow using only tools on Tradeovate. As a new prop trader, I'm not in the condition of buying Bookmap right now. That's a good question, Tendra. So Tradeovate has, I have no relationship with them or anything, but I've used Tradeovate for a long time. And it does have some pretty decent volume profile charts I still use. I also use Sierra chart, which is a little bit more robust. However, I am plagued with questions on it because it's very not user or beginner friendly. Tradeovate is. But for trading order flow, Tradeovate has a great volume profiles and footprint charts. I have videos on how to set those up. So if you're interested in setting up volume profiles or footprint charts on Tradeovate, and the great thing about that is it's very useful because people can use that on both prop firm accounts and personal accounts like me. Good. Pre-markets asked, how are your trades this week? Good. I've taken a couple wins, a few break evens, just haven't been super active this week. I feel like the majority of the time this week, we have just traded very sideways up and down with kind of lacking direction. And there's been a couple moves that occurred quickly when the imbalance occurred. Like just look at the 4-hour chart here. Basically, to start the week and then yesterday, we had some decent moves. Outside of that, the market has been like completely sideways. So I just haven't been super active. Like look at the NASDAQ here, as NASDAQ futures in Q. So we had, to start the week, a nice little pump, right? And then it just went completely sideways basically all week. And then we had this volatility up and down that basically happened just right on news, right? And then this, if you got positioned in it right from the get-go, there's great, but that was pretty much a straight down move. There was no re-entry opportunities really there. I did catch a trade in this. I caught these lows on kind of the fake out of these lows and took that long on NQ. So I caught that move. But other than that, it's like we had this one imbalance move and we had a fake out up and down move on the news here, both news driven. Other than that, it's just been completely sideways this week. So I've been pretty inactive. And many of the trades that I have attempted this week have gone up into profit and then just come back on me break even, and then I've just kind of cut it there. Typical middle of the range type action, right? Good question though. Let's see, what other questions did I miss? 67.50 is the support for ES. Marco Preto. Let's take a look. Yeah, I mean, I'm basically watching, that's prior day lows there. Right, that's the lows from 2.5. So I'm watching that area basically from, if we drop down there to 67, I have a key level around 67.85. So if we drop in that area from like 67.85 to 67.51, I may look to scalp along off of it if we get a strong reaction from buyers. Not saying that's going to be the bottom, right? But if it reacts strongly and I see strong confirmations in the order flow, it might present an opportunity just to scalp it to the long side for a relief bounce or something. I don't always love doing that. If I see us break down this balance range, I'd rather be already positioned in shorts and use that area as just a target. So going over here to the Chart Fanatics Discord, I'll kind of show you guys my game plan. Right, so here in Chart Fanatics under the Matt Owen channel, I shared this kind of write-up of my game plan. So looking at ES, you can see I'm watching this balance range. If we fail to break the highs and kind of drop back down, I'll be looking for possibly shorts on that setup. If we just break down and hold pops under this, then I'll also be looking for shorts targeting these prior lows, right? So that's that 67.50 at those prior lows that you were talking about there. So that's an area to target. And then looking at the NASDAQ here, kind of same thing, right? We have this balance area kind of towards the lows of this higher time frame area, but not super, I'm going to be honest, guys, not super clean structure today. It's a little wonky. Volatility is also super high. And so this is another important point to bring up, guys. Make sure you're keeping your risk consistent and not, when volatility goes super high and price ranges are trading much wider, you need to account for that with your position size and make sure, if you trade your standard position size when conditions go much more volatile, much wider ranges, you're gonna have to risk a lot more dollar amount, right? Because typically your stops are not going to be able to be as tight, and it can lead to blowups, right? But essentially the same game plan on both ES and NQ. Now NQ has been relatively weaker, so downside plays probably a little bit better to play on the NASDAQ, whereas ES has been a little bit stronger. So if we see an upside play, might be better to play the upside on ES, right? Those are kind of, ES has been the leading instrument for the upside. NASDAQ has been the leading instrument for the downside. So if I see a top reversal setup, if all things are equal, I'd probably rather be short the NASDAQ. And if I see an upside setup, I'd probably rather be long the S&P. But we'll cross that bridge when we come to it based on the confirmations that we see, based on the location that we see, etc. NQ is bullish. I'd say it's pretty neutral right now. I mean, higher time frame, yeah, we haven't really shifted any kind of major structure to the downside yet. So I can't say really that we're in a major bear market, at least from pure technicals on the indices. It's a mixed bag, I feel like, and that's what kind of is leading to these conditions on the indices, because different sectors are getting smoked to the downside, and other sectors are holding up. So it's kind of, when we have kind of a mixed bag like that in different sectors, it leads to kind of sideways action on the indices. But obviously some heavy weighted sectors like tech and software have are heavily weighted on the NASDAQ, and that's why we've seen kind of weaker action on the NASDAQ. So I don't know if I would say it's super bearish necessarily, but I wouldn't call it bullish on the NASDAQ. What makes you, Andre Frank, what makes you say NQ is bullish? Curious. We are coming into those, like I said, we are coming into those higher time frame lows where the market has bounced repeatedly off these lows. That's held us in this sideways range for months now, right? Going back to the daily chart that I talked about here, I'll show you guys. So, unless we shift structure, looking for continuation at the highs or lows has not been high probability recently, right? Looking for the continuation outside one way or the other has not been high probability. So we're coming into these kind of key lows now, right? So kind of cautious against chasing that at this point, right? Unless I see that actually break and shift structure very bearishly. So daily and 4 hour just coming. I mean, essentially the market's balanced, right? And very sideways, and we're coming into the lows of where the market has been balanced. So it could certainly bounce like it has repeatedly, or it could shift actually bearish for real this time if we break that structure to the downside. Bigfoot Plays asked a great question. If you were starting again from scratch, which strategy would you master first, and what skill should you focus on? I would just focus on understanding the true market mechanics. The market is just an auction. Understand supply and demand, understand analyzing order flow, and also I put a heavy emphasis on understanding market context. Understand the fundamentals of what's driving the market and position yourself with that, right? So understand the different cycles that the market goes through, understand the context, and don't fight that. Just, we as traders, as short-term traders, we have the benefit of like not playing when it's not a great opportunity. We can sit on the sidelines and just sit back and wait for things to align with context and order flow confirmations and everything, and then just play the game when things align, and when they don't, then don't do anything. But I think a lot of people early on are trying to do a lot of different strategies, and they're trying to win and make money every single day. They're trying to chase action constantly in the markets, and that's just not a very successful way of approaching the game. So here we are, 9:30 open. I kind of expect some decent volatility here after what we saw already in the pre-market with CPI. But again, I take a zoom out and I'm pretty much just looking at 30-minute charts on the volume profile and just staying patient to see what develops. Inside the middle of this range is not, regardless of what I see on the order flow, it's just not ideal to take trades in the middle of the range. So it looks like fundamentally from the CPI data, the data suggests, I'm just looking at kind of the AI report here. And basically it suggests better odds of the Fed easing rates, which is fundamentally bullish for the market, right? That kind of bearish reaction this week after the jobs report suggested it be less likely that the Fed cuts rates. Now kind of conflicting data here with CPI kind of suggesting more likely that the Fed does cut rates, right? So as if we're not balanced enough, now kind of the data coming out is back and forth. Everybody likes to play a guessing game of whether it's likely or not that the Fed's going to cut rates or not. Yeah, so if we continue to see strength from this, get back above like 68.90, maybe if we see strength here back above like 68.60, 68.65, that may be an early indicator to possibly look for long kind of break and retest outside of this overnight balance range, targeting first just a break of 68.90s into 6900. But if we get back above 68.90, 6900 on the S&P, really I don't see much stopping us from retracing all that selling back up into like 6950s. NASDAQ, if we get back over like 24.9s, I don't really, if we get back over 24.9s and hold a pullback, I don't see much stopping us from retracing back up into like 25,100 to 25,200. Take a zoom out here. Can see all this aggressive selling coming into the lows here around this anchored VWAP level. So far it's holding. So far it's holding. So kind of a good sign that we're seeing all this aggressive selling, not able to get back down under this level yet. I don't want to be too premature here and say, you know, we're going to break out to the upside now, because I don't really know yet. It's not a high probability bet yet. But bulls are trying to sustain here. You definitely would want to see them take advantage of this momentum early on today and get above this balance range and hold above it. If they can't do that here early on in the first 30 minutes or so, then it might be a bad day for bulls. There is relatively heavier selling coming into these lows versus the buying. So these bubbles are showing me the delta between aggressive buying and selling. You can see definitely heavier delta from aggressive sellers coming into the lows. Take a look around here. Show you guys a new If you guys don't have volume profiles, I'll show you what I'm watching here. Just an updated view because it's changed a little bit. So this is what I'm watching is just have a lot of balance range built here, right? And then just above that yesterday here, point of control is right there. So we're just kind of hanging out around there right now. It's why you don't want to be like a first buyer on the breakout here, right? Trying to preempt something before it actually happens. And when you do that, high probability of getting wicked out. So nothing has really substantially changed so far all overnight, right? Despite the positive news. Now, if we get outside of this, right, and pullbacks hold above that, that might be more interesting to go long, depending on what we see on the order flow. On the flip side, if we keep seeing pops fail to get above there, then we may be heading back towards the lows. Tales of Miku. He said, how many years have you been trading? I first started trading in 2016, mostly more like swing trading and stuff. Been actively day trading pretty much full time since around 2019, 2020. So you can see here from this attempt from buyers at these highs so far, not significantly strong, and in fact made a lower high here, and aggressive selling still coming in heavy at the lows. Yeah, selling is kind of heavy. But again, I'm not seeing a huge edge here either way. Just kind of in the middle of this area that we've built all this volume. We're in a little bit of a peculiar place where we've kind of already sold off into the lows of this balance range that I talked about on the higher time frame that we've been in for a few months. So it's a little bit curious, I guess. I don't know if that's the right word, to think about chasing longs down here yet, unless we see like a major break of that structure. Also, don't want to be kind of too early of a buyer to go against the weakness either. Bigfoot asked, do you focus on liquidity related concepts in your trading? Yeah, if there's low liquidity in the market, it can drive, large imbalanced moves until we find another place of higher liquidity where the market balances. Larger players are going to need larger areas of liquidity to position themselves and accumulate or distribute at prices. I'm a big Wyckoff theory trader, market auction theory trader. So if you'd like to understand my thoughts on that, then I would recommend this book, Studies in Tape Reading. So pretty stiff rejection off the highs of this bounce range here. I didn't catch it short, but this is kind of that setup that I was talking about in my pre-market game plan here. Let me share it here. This one, where if we see a failed break with a couple lower highs, which is kind of exactly what we saw, and I didn't take it almost to the T. Yeah, failed break at the top of that consolidation range there. Pretty weak. Check out the NASDAQ. Yeah, both exceptionally weak. And look, right into this area. This is where I was saying in the pre-market where we're seeing all that aggressive buying kind of failing to get any higher here. We popped right back into there and sellers rejected it pretty stiffly. So that was actually a pretty solid short opportunity there at the highs of that balance range. Pretty solid opportunity there. I didn't take it though. Now we're breaking the lows of this range. So if buyers don't recapture in a pretty expeditious manner here, then we could see another capitulation type drop today. This is a pretty do or die spot here early on for bulls. Some aggressive buying coming into these lows here. See if we get a little pullback here. It's tough when we drop into a low like this and just kind of hit it and then shoot straight back out of it without any kind of retest or any kind of confirmation. And that may have been what we just got there. But you can see this large selling came into this bid at 68.15. So we had a large passive buyer sitting there at 68.15, scooped up everybody that was willing to sell. And then after that, selling decreased and immediately recaptured back above this. So I kind of like this area. If bulls now hold just this being the low of that balance range, but we kind of shot straight back out of there faster than I was willing to pull the trigger on it and never got like a little pullback or retest of any kind there, which was unfortunate because I would have loved to long that there. When I see a balance range form like this, right, we can either look for this, which was a weakening of buyers at the highs, and then we drop to the lows of the balance range. Or once we kind of get that nice strong drop into there, when we see a large passive buyer absorb all those sellers, look after that. So a ton of people, similar to what we saw on the upside, chased the downside here into the bottom of this balance range, and nobody was really willing to participate lower. Look after that heavy selling came right into that passive buyer there, and the selling just dwindled off, and then that aggressive buying came back in. And this leaves the situation where now everybody has just gone aggressively short to break down this range, failed, and now we're squeezing out all those shorts right back up to the middle of the range. So excellent setup there. Unfortunately, what I typically like to see for an entry on this is I like to see this, and I like to see the aggressive buying in to come in to confirm it, and I like to see one more small pullback. Unfortunately, just did not even get any kind of pullback. We hit that and just shot out of it. So it's just one of those ones where it's like, okay, well, what do you do there? Sometimes what I will do is when I see this form is I'll just go long as soon as we recapture above this guy. So this is where that passive buyer was. And so once we break back above this guy here, we have a pretty good solid understanding that we're about to see a short squeeze, at least back up to the middle of the range. So I will just immediately go long there, like around 18, 19 with a stop down here. But yeah, I was not that fast on the trigger for it. I wanted to kind of see it play, see the aggressive buying, and then see a weaker selling pullback. Just never got it. We just shot straight out of there like a rocket. That's okay. That's all right. Just an absolute rocket shot straight out of the bottom of that balance range. I'm also watching, so another thing that I've been watching a lot recently is IGV. That is the software index for a lot of big software names. Top most heavily weighted things in that is Microsoft and Palantir. That kind of came into a capitulation type drop into a key area of support. So I've been kind of watching that because that's been kind of the leading weakness in the market. So if that comes into an area where it gets some major support, then how much more is the whole market going to rebound back if what was the weakest one dragging the market down, despite other things staying relatively strong, comes into key support and holds it, then we could see a strong rebound overall. Sick catch. Yeah, if you guys, talk about a V-shaped reversal. I was ready for it. I was watching that area. That was my area of interest, and it still shot out of there too quick without even an entry model for me. Holy crap! Jeez. So again, going back to the pre-market game plan, if we get strength now above this balance range, especially with the context that we already did a fake out and swept liquidity under the lows, then this could really pour the fire on here. But I want to be cautious being a first buyer here at the top of this balance range, because we could again revert back down to the middle at least. So if we see strength here, get above this 60, 65 area, and we pull back and hold, kind of a break and retest above the top of this balance range, then I'll be more interested in potentially going long, targeting maybe 6890s, 6900. But this is an area of resistance, and you can see at 59s here, this passive seller. See if that breaks though. Yeah, if you guys appreciate this in-depth analysis, both on technicals and order flow and everything, it helps us out a ton. If you guys smash the like button, and as a thank you for smashing the absolute heck out of the like button, we will run giveaways later in the stream. We've got, again, multiple things to give away. We got Apex. Let me verify again. Apex, Alpha Capital, and TradeZella. We're gonna see another nasty up and down in this balance range. Oof, man. Telling you guys, you don't want to be chasing at the highs or lows in these conditions. Don't want to be a late chaser. There's some aggressive buying coming in. Did you guys see that? Did you see how the tape just sped up there? Unfortunately, it's just like dead middle of the range here, but I like how the tape just sped up there. We'll see what happens from that. This thing is fast, fast, fast today, guys. Be careful. S&P is moving up and down like the NASDAQ today. Good grief. Did it news come out or anything? Let's see. Check my high impact news. Some kind of news about Alibaba came out a little bit. I wonder if that sparked it. Yeah, this is fun. Yeah, I'm still sitting cash, guys. I'm still waiting for the right thing. My favorite setup by far here was what we saw down here. Unfortunately, that I didn't get the entry model that I like, which is once I see this, I like to see that aggressive buying come in. I like to see just a little bit of a weak selling pullback, and didn't get it, and it just moonshot straight off of it. You can see what happens though when we come to the low of a balance range like that and we see a large passive buyer defend it. It just instant short squeeze triggers back up, and that's one of my favorite setups right there. I talked about that. I caught that on one of the recent Chart Fanatics live streams. That's one of my favorite setups on a balance range. We dropped to the lows of it, and look at that big old buyer just sitting there, scooped up those guys, scooped them up and trapped them so hard. Yeah, so we can see right here in the middle of this range how the tape sped up there. There was some interesting activity going on here. You could just see it in the speed of orders coming in. Yeah, you definitely want to manage your risk consistently, and do that by reducing position size in a very, very volatile session like this, right? The tape is thin, and so there's a little bit less liquidity here, so highly likely to sweep quickly up and down, right? Yeah, be safe. I always have a hard stop order on, right? I typically enter with brackets, and I can adjust that as needed. But you don't want to be caught. You don't want to be caught slipping with a mental stop if some, things go against you in these kind of conditions. So be careful here, guys. VWAP and 20 EMA I'm watching like merge together right here. Just balancing on a knife blade in the middle of this high volume range here. I'll show you guys my footprint chart. I kind of got it way zoomed out here, but this is what I'm looking at. In the S&P, see the day volume profile over here. You can see how we're just in the middle of it, right around VWAP and 20 EMA. Buyers are interested today. Are we going to see just a massive buyer's revenge come in today? If we get above this balance range, I could see just a massive buyer's revenge short squeeze incoming. If we get above this balance range here, above like 60, 65s, it might be a bear steak for dinner. But that's a big if, right? And I want to fancy dance it and preempt it, right? I want to see what is happening when it does happen. Don't want to try to predict. Want to see what does happen and what is high probability when it happens. When I say I don't want to predict, like, of course I have game plans that I'm watching out for, right? But I'm not, in my execution, I'm not preempting that before it happens. And that's a big mistake a lot of people make, is they get set on something that they think should happen. And then instead of waiting for the right confirmations when it is happening, they try to preempt it because they think it should happen. And that's a dangerous place to trade. Take a zoom out here, look around the charts. Where's VX at today? Check out VX. Oh, VX is ripping. Hello. That's going to add a lot of pressure on the markets here. VX is ripping. Over 21s, heading towards 22s. Yikes. Yeah, that's going to add a lot of pressure against pops here. Yeah, VX is ripping. That's important to note here. Seeing this strong buying into the highs would be better if it was confirmed by seeing the VIX weak. But seeing the aggressive buying coming into the highs with the context of VX ripping is a little different. We have those prior highs on VX around 22. We'll see what happens there if it tests that. Show you guys what I'm looking at here. You can see we continue to hold those higher lows on VX futures and strong blast out of here this morning. That is not ideal if you want to see upside on the indices, right? That's gonna add pressure, right? It's like if the market tries to bounce, that's gonna be like ankle weights and the market's trying to jump. Wow. Holy volatility. Goodness gracious. Yeah, you don't want to be touching this thing in the middle, guys. At least for me, hands off in the middle here. This thing is zipping up and down. It's a good way to rack up stops in the middle here. I have not touched this thing. IGV is decently strong back above 82s today. So if that holds above like 81.75s, 82s, that's gonna, kind of add gas in the engines for buyers, right? Because that, like I said, kind of mixed signals here. VX is running hot. We'll see if it pulls back. It is pulling back right now. But VX is running hot up into those prior highs above 21s towards 22s. However, at the same time, IGV is popping, which has been a leading cause of weakness in the market. So if that bounces, then that's going to take a lot of pressure off the indices. So kind of mixed signals here, guys. That's why we're in a balance range. What are you guys watching? What are you guys trading? Sorry, I've been closely watching this, so I've kind of missed the chat here for a bit. What are you guys watching? Are you guys watching ES and NQ? Are you guys trading something different? Let me know. Oh yeah, somebody asked about the book that I Studies in Tape Reading by Richard Wyckoff. It's like a 100-year-old book, but still very relevant to understand market auction theory, understand tape reading, which is essentially reading the order flow. Buyers continuing to be very resilient here. I mean, look at the positive delta on the day. The cumulative volume delta so far, 4,500 lot positive delta here. So, you know, despite the pressure from the VIX, despite, you know, the overall weakness since yesterday's selling, buyers are pretty darn resilient down here. Now, if they fail and get trapped, then that could be fuel to the downside if we break down, but impressively resilient despite all things considered here. Somebody said looking for a pullback to long 68.20. Yeah, I like this spot. You can see where this large buying was. You can see where that large buyer was. But it's a little tough in these conditions, man. I liked the first failed break of the balance range down here. But, you know, the fact that we're still in it, you know, VX is running hot. Not ideal. If conditions were more trending to the upside, you know, I would like to see a large outlier like this hold a pullback. Whoever's trading this, y'all are brave. Yeah, Joe. I like to think I'm brave, but I'm cash in this, guys. To me, the opportunity was here at the lows of this, or here early on, likely just targeting the mean. But here in the middle, basically between like 50s and 25s, anywhere in here is just a hands off. Tough week, SMB Financial. We've seen a lot of just balanced ranges for the majority. We've had a couple large imbalanced moves that pretty much happened, and if you were positioned for them when they happened, cool. But outside of that, I feel like the majority of this week we've spent just in choppy ranges. Let's see, what else did I miss? What's crypto doing? Anybody trade crypto in here? Been keeping my eye on it. I don't really trade crypto, but been kind of watching the drop for a time to start buying. What do you guys think? I'm curious of the group odds here. I don't know. Can I post a poll? I don't think I can post a poll. Do you think today on ES and NQ, S&P and the NASDAQ, do you think we go up or down or sideways? Let me know in the chat, long, short, or sideways, AKA stay cash. Let me know what you guys are thinking. Sideways, NQ short, cash, up. These buyers are, they got balls today, I'll say that. You're in long now? Yeah, there we go. There's a poll. Thanks to the team on the back end here. Long, short, or sideways? Let me know what you guys think on ES and NQ. Let's put our collective intelligence together. Long, short, or sideways? I didn't know we could do that here on YouTube. That's great. I like this polls thing. Let me know, guys. Vote in there. We got 40 votes. Come on. What are we thinking? I see the downside risk as relatively low as far as a continuation breakdown. We've, unless we shift major structure to the downside, but if we recapture the highs, I feel like upside potential for a squeeze. There's a lot of juice to squeeze, right? A lot of people are short now from yesterday. So if we break out back to the upside, especially coming into these higher time frame balance range lows, then there's juice to squeeze back to the upside. And this has just been, look at this 5,000 lot positive delta. Buyers are showing up. Now the question is, do they get rewarded? Because effort times no rewards means just even bigger, stronger passive selling, which could lead to that breakdown. And that's the risk. But right now, if this much effort does get rewarded and continuation to the upside, effort plus reward will equal short squeeze today, in my opinion. So 46% leaning long, interesting. So 27% short and sideways, very mixed, but most people are leaning long. That seems like what the order flow is representing today as well. That seems very close to what the order flow is showing here too. Matt, when you were a break-even trader, what catapulted you to being profitable? Improving your psychology or technical analysis? I'm big on both, guys. People are constantly having this this battle, I feel like, of what's more important, trading psychology or trading technicals. One does not work without the other. So you got to develop both. You can be the best technical trader in the world, but if you are not a master of yourself and your psychology, you will not be a successful trader long term, guaranteed. Vice versa, you can be extremely disciplined and extremely patient and very good at managing your trading psychology. But if you don't have a solid technical strategy, then you're not going to be successful either. So it's not a matter of one v the other. It's a matter of you have to master both, period. Now, if you're already in the break-even stage of trading, if you guys are there, you don't know how close you are to really parabolically growing and being a profitable trader. Because if you're in a break-even stage of trading, that's already very tough to get to, right? And so it depends on what your problems are holding you back. Are you trading really good and then having blowups that take you back to break even? Are you just inching your way along, kind of wins and losses? Either way, I would say the biggest thing is to really just tighten up your execution and focus on eliminating things that are not working. And that comes from one, like tracking your data really well. So TradeZella is a great tool for that. And by the way, check out the discount code in here for TradeZella, and we will have a TradeZella account giving away. But really, really being systematic about tracking your data, tracking your trade setups. But yeah, I mean, once you can at least get to the point of being break even, and eliminate blowups from even being a potential, like you are really so close to just having a parabolic growth as a profitable trader. You really got to tighten up your P's and Q's in terms of your execution, in terms of really defining your system and what's working and what's not working, and just focus on the long term with that. Don't be distracted by the short term ups and downs of your outcome. Focus on being really, really consistent with your performance of your trading system, of your trade setups, right? And it's a little tough when you're in that break-even stage because your vision is so narrow on like right now. You want to be profitable right now, but I'm telling you, like, it's always an up and down game, right? You'll have months where you are just parabolic and you'll have months where you're relatively flat or a little red, right? But if you just focus on stay very, very focused on your consistency of your processes and your trade setups and your execution, then, those down curves will be small and those up curves will be huge. So I would say the biggest thing is really, really track your data, really, really mine your P's and Q's, and focus on the consistency of your performance, not necessarily your consistency of your short-term outcomes. We are just still flirting with these balance range highs. So much buying is really trying to do this thing, but still kind of stuck here. You can see the tape speeding up again here off these 68.50s. You see that buyer stepped in here, that bid stepped in here. We'll see if that gets rewarded or not. You can just see it on the DOM here and on price, like when the orders speed up. The biggest thing that I watch for, and that you'll learn for yourself over time reading the order flow, is really understanding speed of the tape and anomalies of size. So anomalies in size and speed of orders as they come into the market around key levels. Once you start to really get a feel for that and see that, it becomes almost like a spidey sense that you learn how to read. And it's not totally intangible, right? There are very tangible things that I look for in terms of, wow, look at that. In terms of trade setups and confirmations, things that I look for. But you definitely learn to get a feel for reading anomalies in the size and speed of orders. Sellers ain't having it right here. What a battle in this balance range, dude. Look at this. We are still just grinding it out in there. Look at that absolute battle here. Look at where all that volume is built here. We won't stay in this range forever, either today, possibly next week. Well, we will get out of it, right? But important in the meantime to not hurt ourselves in the middle. Yeah, Ricky, so he said, thank you. Yes, currently in the break even, the losses are small, but they slowly eat away at your wins. So what I would focus on, if you're just getting kind of you're managing risk versus reward well, but you're kind of getting eaten away by small losses, is I would really try to hone in on the A+ setups and do less, right? That will improve your win rate likely, is if you really focus on the A+ things and cut out the B and B+ trades, right? That are kind of dragging your win rate down. If you can get really definitive about what's working well and what's A+ and just trade maybe a little less frequently for that will improve your win rate ideally. And that could be what takes you from break even to profitable. What a barcode though. On the candle charts, I mean, we see a lot of activity here at the highs and lows on the order flow, but even looking at 15-minute, man, what a barcode. IGV is stronger. IGV is stronger, which again, like I said, has been one of the weaker ones dragging the market down, especially the NASDAQ. But still kind of a mixed bag because VX is running hot. That's putting pressure on. IGV is up, which is taking pressure off. So still kind of mixed here. Yeah, what a barcode on ES and Q. Just pulling up my 15-minute charts here. But this is our advantage, right? As traders, we don't have to sit here and hurt ourselves in low quality trading conditions. We only have to execute when there is a very high quality opportunity, right? But a lot of people, try to force things that aren't in the cards, and that's what hurts them the most, right? There was an analogy that Warren Buffett said that I loved in terms of investing, which was, it's very similar to like being a hitter in baseball. And, like certain pitches you swing really well on. And certain pitches you don't, but they may still be a strike, and you still are kind of forced to swing at it because it could be a called strike. But in investing / trading, there are no called strikes. We don't lose money for sitting cash, right? We only lose money on attempts that we take that we lose on, right? So we have the advantage of there's no called strikes. We're not going to lose money from sitting back and staying cash and waiting for an A+ opportunity, right? That's a huge benefit. We're still actually battling within the overnight range as well. We did take out the lows. We have not taken out the highs from Asia. On NQ, I'm looking at Asia session highs have not taken out. Let me look at ES. Yeah, has not even taken out the Asia session highs from the reopen last night, despite all this aggressive buying. We did sweep under the lows. Yeah, US markets are closed on Monday. I'm tracking. We got President's Day. We got Valentine's Day tomorrow. Not that that means much to the markets, other than maybe some people are already out today for vacations and stuff. And then we got President's Day on Monday, so markets closed Monday. So typically, when I see us going into a holiday weekend like this on a Friday, I watch out for balanced conditions and choppy conditions, especially as it gets later into the afternoon. Just because you gotta put yourself in the position of people. Most people are a significant amount of people go on vacation, they go away from their screens. So I typically look for base hits on the morning on Fridays, and I look to not really be too involved on Friday afternoons. But this thing is compressing like a spring, so we could see a large imbalance occur, especially if there's not too much liquidity. If we squeeze outside of this range, we could see a large imbalance move occur later in the day today. That is a very strong potential. Yeah, most markets want to be done by lunchtime today and start the holiday weekend. Yeah, exactly. But man, the markets have a way of catching you anytime you're sleeping and thump you on the head, right? Don't they? When you least expect it sometimes. Man, what a balance range. Typically, this is something from studies and tape reading as well. So let me just give you guys some advice on balance ranges here. At least this is what I do. This is what works for me. You do you. I'm being mindful here because if something does form here and we break, then I'll be more interested. So let me put this like right here. So typically when I see a balance range form, imagine this on this blue line here is a volume profile, right? So we see a balance range of volume profile. The volume distribution declines at the extremes both ways, right? And so when we see this form, we'll typically see price oscillate like this, and it typically will form like a pennant structure. So when I see a solid balance range form, imagine this is like the point of control where the highest volume distribution is in the middle of the range. I typically like to be involved with this in the earlier half of this, right? So let me see this. So that's not enough. Hang on. So in the earlier half, once we have a strong balance range like this, there's more juice to squeeze, if you will, in terms of a mean reversion setup at the highs and at the lows and highs, right? Targeting kind of that mean reversion. But the longer we spin in that and the more we narrow in, the more I get hands off and just wait for a true like breakout of that range. Just because there's just less and less opportunity in terms of risk versus reward of trying to catch it here, right? I like it earlier on when a balance range forms. It will test the extremes many times before we get a strong break out of it one way or the other. But ideally, when the swings are wider in the balance range, I like to be involved for those mean reversion setups at the highs and lows. But the more we narrow in like this, the less and less I want to be involved. There's just not as much juice to squeeze as far as a mean reversion setup. Does that make sense to you guys? Drop that in the Chart Fanatics Discord if you guys want to review that. Aggressive buyers are still coming in though. I mean, they have shown remarkable resilience here today in this range. But again, I don't want to fancy dance this before the move is ready, because you can see 1, 2, 3, 4, 5, 6 pops into these highs have rejected back down, right? I want to see as early as I can a true imbalance move start to occur. What's NASDAQ doing? Yeah, NASDAQ's breaking out now. So look at that strong buying here at the highs. So I'm watching this here. I like the large buying coming into these highs now. Over these 65s. Let's see if we get any kind of a pullback here. Holding well above the 20 EMA, which is nice to see. Don't want to get faked out if we stay in this range. Want to see it truly break out and then hold it retest. Ideally, when we get a strong like breakout of a range like this, we leave like an intraday like low volume node and then hold that on a pullback. So we'll see what happens here. I like the squeeze coming in. I like the squeeze. I took that at 67s. I'm watching. Let's see if we can squeeze up into the 80s. I'm gonna go break even here. I'm looking at these kind of larger resting orders up here at the 80s. If this sweeps back under 68, I'm going to take it off break even and I'll watch for a reentry. If we get a true strong squeeze here, it should go pretty hard. There we go. There we go. Still holding. All right, I'm all out there. Started to slow down. That's all I was looking for, was a squeeze up into those 80s. So I got about 11 points there on ES. I was risking 2. That's it. Yeah, I was long from 67s up into 77. So actually it pulled back slightly there. So I got 10 points there. I was risking about 2 points. Just a squeeze on that balance range. Nothing crazy. So you could keep holding here, but I was only trading 1 contract. So this would be a scale out point for me. Let's see here, right? So you can see we broke that balance range. We pulled back and we held that pullback, and then look at all this delta right here where that aggressive buying came in. As soon as I saw all that aggressive buying come in, I took a long here. And my stop was just about 2 points here under this aggressive buying. Because if I'm right on this trade, all this aggressive buying is squeezing over that balance range. I don't need to hold a loss below that. So I'm risking 2 points just to squeeze 10 points up into those 80s there. Done. That's it. That's all you need, guys. So 2-point risk for a 10-point trade, roughly. It's about 5R. And didn't need much. We just needed to see the strong buying break over the top of that range. And once that comes in, the probability of getting a 10-point squeeze there, super high. Super high. Easy money. And so as far as the target, I was looking at the prior highs, and then I was looking at all these resting orders on the heat map here. So you see, we might squeeze through this, guys. We might squeeze 50 points from here. I don't know. I don't care, right? That was my trade. I saw all these resting orders up here. So this was my target, right? And as soon as we hit that, and then I saw price start to dwindle, then I just cut it, right? It's just a scalp, guys. I'm not like positioning myself for an all-day move here. It might happen. If I was in more contracts, I probably would have scaled just half and then held the rest for a continued squeeze, because I still like this for a continued squeeze here, right? But if I'm just trading one contract like this, then I'm just going to take it for the scalp, right? Because that's the highest probability thing there is just the scalp with that aggressive buying, squeezing at the highs. Done. Easy money. But if you're positioned with more contracts, then I like for that type of a possible trend reversal here, squeezing over this balance range, I would scale out some and hold some. But like I said, it's Friday going into a holiday weekend. I like base hits and go enjoy my holiday weekend. Wow, VX came off hard. W, I think, means win. Thanks, chat. Rob Gordon said, have learned some great stuff from you. Awesome. Yeah, if you guys enjoy seeing live trade execution like this and learning how to trade with order flow for real, smash the heck out of the like button and we'll run the giveaways. How about that? But again, going back to the Chart Fanatics Discord here for the game plan, right? This was this scenario straight out of my game plan here. See the green line? That was the scenario for the trade setup. And then going back to the balance range, I said, I like the mean reversions early in the balance range. Once we form this structure, then I like to sit back and wait for a squeeze on the highs of the balance range. So that's exactly what it was today. It's exactly what it was today. Let's see, what are we at, chat? $130 likes. Let's get 150. 150 likes, guys. And we got free giveaways. Yeah, and see, that's why I don't love that comebacker there, right? The highest probability thing for me was just, you know, catching a nice squeeze, a run on everybody's stops that was above the balance range there. A nice easy squeeze. Now we may hold this pullback and we might get a nice large continuation move outside of it. We could hold this pullback and get a nice large continuation move. $145. We're just 5 away, guys. Let me pull up. You see what I mean, though, guys? We don't have to play when probabilities are not in our favor. We just have to sit back and wait for the right opportunity. And when it comes along, it's like money sitting in the corner of the room and we just have to grab it. That's it. That's all you got to do. But people run out of patience and they try to do silly things instead of doing what they know they should do because they just run out of patience. There we go, 151. Heck yeah. All right, guys. So let me get my man Anthony here ready. All right, so in the chat, one time and one time only. If you try to hit it multiple times, you will not be entered for the giveaway. We have three giveaways, right? We have Apex account, Alpha Capital account, and a TradeZella 12-month account, right? That's killer. So exclamation order flow one time in the chat if you guys want to be entered for the giveaway here. Exclamation point order flow one time in the chat here. and we'll give it just a minute. It's gonna be fast, guys. You guys gotta slam it quick. And we'll run the giveaways. I'm losing my voice here. This was a great lesson though today about how to treat balance ranges, both how to play within them at the extremes and how to wait. You know, once you see them kind of form into a pennant, there's less and less juice to squeeze as far as the mean reversion, and then wait for the squeeze outside the range, right? For a nice, you could trade it like a scalp like I did, or you could potentially look to get positioned for the bigger intraday move if that happens. All right, we're gonna wrap it up, guys, in just 1 minute. It's kind of a key spot now for buyers to hold here is around these 60, 65s. It's kind of a key spot to hold now. If we recapture back inside the balance range now, that would be a sign of weakness. All right, we're gonna wrap it up here. Anthony, let's close it up. That 20 EMA is also correlating right here with the top of that balance range, the top of where all that volume is built. I'll show you guys what I'm watching here. Sorry, we're gonna run the giveaway, but let me just show you guys what I'm watching here. So here's that balance range you can see on the volume profile here on the right-hand side. Here's my trade where you can see where we squeezed above it from there to there. Just a 10-pointer. Now we're coming back and you can see the 20 EMA here is also closely aligned with that 60-65 area. So this is kind of key for bulls to hold this area if they're going to continue to stay higher. All right, I got the list. Let's run through some giveaways. On screen here. Yikes. Sellers kind of rejecting back in here. Chronicles of Scene. Let me know in the chat if you're here. It is closed now, guys, by the way. It is closed. We're running the giveaways. Let me know, Chronicles. Are you here, Chronicles? Let me know in the chat. There he is. Congratulations on the 300K Apex account. To claim that, head over to the giveaways tab in the Chart Fanatics live Discord and submit and follow the instructions there to claim that. Congratulations, man. This is not a nice rejection from sellers here. This is kind of damaging to the bulls' case of getting outside this balance range. Yikes. James Dryles. Are you here, James? There he is. Let's go. Congratulations on the alpha account that you have won. Head over to the Chart Fanatics Discord to the giveaways tab to go ahead and claim that. Big win, man. Congrats, James. All right, guys, we got one more here for TradeZilla. Rena Tapakanilla 7941. Congratulations. Let me know if you're here. There you go. Everybody's here quick today. Nice. Congratulations. Head over to the Chart Fanatics Live Discord to go ahead and claim that in the giveaways tab. Yeah, so this is the risk of trying to play that for a bigger move versus just scalping it for the quick squeeze, right? Obviously, higher probability to scalp it for the quick squeeze like I did. Hold it for a bigger move, especially against the higher time frame weakness that we've seen this week now. That's the risk, right? Trying to play it for a bigger one. That is not a nice rejection from sellers there. And it looks like IGV is wicking down kind of hard here. And that's probably triggering quite a bit of weakness. Quite a bit of weakness triggered off that. Yeah, congrats to all the winners. Let me know in the chat, did you guys learn something today? Did you learn a setup? Did you learn analysis that helps you? Something about order flow? Let me know in the chat. Those are nice quick wins for me, right? From 29 to 33. So 4-minute trade for a 5R scalp is, I love that for a base hit on a Friday. Learned about Bookmap and reading Orderflow. S&B Financial, absolutely wish you were live every day. Bounced off last week lows. Do you use gamma levels on ES? That's not something I look at a ton, no. Absolutely ordered the studies and tape reading book. Good advice for break-even traders. Learned patience. Yeah, that's what it's about, guys. That's the name of the game, man. It's the name of the game. Awesome stuff. Awesome, awesome. So kind of back into the same structure as before, guys. So, you know, seeing a failed breakout like that kind of puts the ball in the court of sellers now for a possible breakdown, right? Once we broke out of that balance range, you'd ideally would like to see bulls hold. Ultimately, it turned into a nice squeeze, which I capitalized on, but then rejected back down into the range. So need to be mindful here of that balance range, and that's what I would watch out for kind of going forward today is how this develops. And actually that kind of rejected right off the point of control from yesterday. That's why I was saying there's two things going on here, right? We've basically been in this balance range area since yesterday afternoon, here and here. So that's why this is part of the reason I wasn't too overly greedy with that scalp on the high of this balance range. Because if we look at this overall, right, this is kind of the most recent balance range that we've been in, right, from here to here, right? So we got above this here, but we still had, you know, kind of all this resistance from yesterday, right? So for me, the scalp was just there to there, right? And that also aligned with all those resting orders that we saw on the heat map on Bookmap up there, right? So the real, in my opinion, the real squeeze would come is if we got back above there, which is the overall balance range that we've been in now since yesterday afternoon. That would trigger the real squeeze, you know, back up there. But ultimately, we kind of squeezed out of here, the overnights just back up into this bounce range from yesterday, right into there. And that's why, part of the reason why I didn't look to get too greedy with it and just took it for a quick scalp. Right? But going forward today, I would watch out for essentially this range. If we get above that today, then we could have a late day squeeze back up into there. If we get it below it, the wheels could come off of this train and we could capitulate. Or increasingly likely, the longer we just kind of stay inside this range going into a holiday weekend, we might just fizzle out inside the range. But that's the clearest picture I have of what's going on here today, so I'd stay mindful of that. I'll drop that in the Discord for you guys. That's a one and done for me. 5R on 10 points on ES. That's a one and done for me on a Friday into a holiday weekend, guys. So I hope you learned something. I hope this was super valuable for you. Please like and subscribe Chart Fanatics live channel here if you guys want more of this live trading from me on Fridays and other great traders throughout the week. Thank you guys for tuning in, and I'll see you guys next Friday. Peace. Thanks, everybody.